Apple, the technology giant, reporting earnings per share of $1.85, revenue $49.6 billion after the bell yesterday, slightly beating analysts' expectations. However, the company's outlook for the next 3 months and concerns about the iPhone's ability to continue delivering robust sales is weighing on the stock this morning. Take a look at where we're expecting Apple to open. Also on the earnings call, Apple CEO Tim Cook highlighted growth in China, saying Apple is going to pedal to the metal in the region despite recent volatility in equities markets. Not only Apple, but IBM, Microsoft, and others reported weaker than expected stories in the last 3 months, and that's certainly in technology. The mystery, Keith McCullough, is around the Apple Watch. We don't have any numbers. They did not disclose the number of shipments there. Yeah. What's your take on that?
I don't have one. I could tell you that. You noticed
this. That's not an Apple Watch.
This is the Fitbit.
That's the Fitbit.
Yeah.
Right.
I generally consider it a problem when you go to sleep that the thing dies on you. I mean, that would be, a functional problem.
The charge is an issue.
Even the people who are almost like the messiahs of Apple don't really buy into the watch. So I don't know if this is a watch story. I think this is an expectation story. You look at this stock straight up into the number, really after the Google number, and that was really my takeaway. Apple, not Google on that quarter, that's for sure, and Microsoft neither. So now we have a big ramp in technology stocks that have to deliver on what I'd say are very high expectations. So again, that's the only thing that's kept the market up. Obviously, a lot of other subsectors of the market have been imploding, not the least of which are metals and minings, energy stocks. So again, this is going to be an interesting horse race as we go into Facebook next.
But I'm glad you mentioned the charging, because I'm sitting here with my iPhone, actually, and this is the 6, and I'm only at 22% charge. It's been plugged in since we started the show 2 hours ago.
Yeah, it's awful.
So it's like the charge really is an issue. That's just an Apple story. But you were going into the broad technology story. Is this indicative of what's going on in the current economy right now, the fact that we are looking at some disappointments?
I mean, generally speaking, if you look at any broad indicator of tech, you can look at semiconductor stocks, they look like hell. You can look at the Kospi in South Korea, that looks like hell. You can look at Taiwan. You can look at any kind of what people would consider a macro read-through on demand.
And the metals and mining is a macro look at China, right?
Yeah, all that stuff. I mean, so unless you have something that's really powerful from a product perspective, you're not going to get a multiple on your stock. So again, global demand and inflation are falling. That's the story behind the story here, and I think that that's what you really need to watch for in the market.
I feel like it's going to take something huge for people to turn on Apple, because as I mentioned earlier, the analyst community is still overwhelmingly bullish on Apple, despite the company just putting out a fairly weak forecast. I did notice one downgrade this morning. Cowen downgraded to $130 price target, which means they're saying it's not going to go really anywhere from where it is right now. They lowered it $10 from 140. But Wall Street just continues to be bullish, and that to me, back in my trading days, I would be the contrarian. I'd be like, I don't know if I want to own something that everybody says is just going to keep going.
And to be clear, all it needs is for the chart to break. I mean, people are chasing charts in technology. Point, finale, period. So the chart breaking on Apple, I think, is the catalyst. That's it.
But the Wall Street Journal points out that Apple right now is trading at a 20% discount to the S&P based on forward earnings multiples. Going back a year, is at a 13% discount, so it's at a steeper discount than it has been a year ago. So maybe at least a little bit of bad news factored in at this point.
All I'd say about that is that a cyclical, because they are on a product cycle, should look cheap at the peak of the cycle. Something to think about.
All right, let's